Hey everyone, Brian Stahl here. Welcome to Fidelis Mortgage Corporation's new YouTube channel. And today I wanted to talk about how Fidelis helps our customers and our business partners create massive wealth in real estate. So let's talk about you're the first time home buyer. You've been looking at these online courses, you've been reading books, you say, how are all these people becoming multi-millionaires in real estate? Well, I'm going to tell you the step one. When I bought my first house somewhere around 20 years ago, and it was a small, cheap house, but if I had to go back again and I had a mentor and I had someone telling me what to do, I would have bought a 3 to 4 unit to start off. And let me tell you why. So you can buy that as an owner-occupied property and not an investment, so you can get low money down. You could even do FHA, 3.5% down, and you can rent out the other 2 or 3 units while you live in the one. See, when you buy a house, how it's labeled is based off of your intent. So your intent the first year is to live in it, and you will. So let's say you live in it for 2 years down the road, like, wow, this is paying for itself, I'm making money, I'm getting cash flow in, what's the next step? Well, you could maybe downsize to a duplex where there's 2 homes side by side, and the market may say to you, hey, are you really going to live in this? You're going to have to write a letter, and it's going to have to be accurate, correct, truthful, of why you would be motivated to go from a 4-unit to a duplex, which is basically a 2-unit. Well, it might have parking in the back, it might have garage, it might be bigger, it might be in a different school district, and odds are the market will accept that. Now you have a 4-unit, and you have a 2-unit that you've bought owner-occupied. You're renting out this one, which is paying for where you live. This is purely cash flow now with a 4-unit. And you live there and a couple years go by again. And now you're like, maybe I want to buy a townhouse. Maybe I want to buy a single family home. So let's say you make your move and you're like, well, I have a family now. I want to get a half an acre garage. Now you're buying it with low down payment again on owner occupied. So you have all these properties that are now paying for this and provide cash flow. Those 3 moves right there have a high probability based on your price point of turning you into a millionaire off real estate just alone. That's your first step. While you're doing that, your second step should be getting connected to someone that has deep pockets and has private money. So one of the ways that our partners gain wealth in real estate is we own a private company and several $1 million of funding. We'll go in and help people buy distressed properties or properties fast, cash, and then we help them work to get out of the deal and to get into a regular Fannie Mae or Freddie Mac type of home. So there's a few people around that are doing these types of business. You need to connect to one, show them that you're creditworthy, show them that you have experience in real estate, and show them that you know what you're doing. Next thing you know, you can have access to private money all the way up to 100% of financing. I promise you this is out there because I do it for people. I do it for business partners. I do it for realtors that send us some clients. And next thing you know, we're building their wealth. We just did one, I can't name him, for a real estate partner that he bought the house somewhere around low 300,000s. We did 100% financing. He did the rehab, and I saw the appraisal. It came in at like 560. Over $100,000 of profit, and I don't know if he sold it or if he's renting it out, but that's just one example. Now let me kind of transition into, let's say you did buy a portfolio and you have 5 or 6 homes at the end of the day. What kind of equity's in them? Can you harvest any equity? Can you pull the money out to get your next property, or maybe you have another type of investment? So imagine, this is kind of a very aggressive example, but let's say you were able to pull 100K out and you don't want to buy real estate, but you want to do some other investments, whether it's stocks, crypto, whether you wanted to get creative and rent cars out or do your own hard money lending. It's all about how you can take money from your current assets and spin it into something more. Which brings me to, once you have those 5 or 6 properties, Airbnb versus renting to one individual on a year lease. There's pros and cons to both, right? I'm a massive Airbnb fan. I love Airbnb. There's certain risks to it. Let's talk about those risks. One, if you buy a property, like let's say in a little borough in a town, you're always at risk of them changing the rules on you. And I had 3 in a certain area, which I won't name the area, that the township, and this was a resort area, the township got together and said you can only have 2 people per bedroom, so it went from renting out to 10 people to 6. Well, what that did in that case is we were charging 500 some a night at 10, and now we can only charge 300 and some a night at 6 people. But I knew that could happen. You have to go in knowing what can happen and what your risks are. So the numbers still work great there. It turns into an average investment instead of a horrible investment. If you're going into something and you're only average when it starts, and if anything goes bad, you could end up losing. So know to hedge your bets on a little bit of that stuff. Same thing in cities and towns. You just have to be careful. You have to be careful if you have to turn your property back to a static rental, meaning someone for a year lease. Do year's lease? Do the numbers still work for you? That's the main risk in Airbnb. A lot of other people will say, "Oh, people damaging your property, people doing this, people doing that." I can tell you the people that have had living in properties for 2, 3, 4, 5 years have done 100 times more damage than the Airbnbs I rent to. And here's some of the safeguards to it. 1, Airbnb people have reviews. So you can see who you're renting to, you can see what other people said about what they did to the property at the end of the day. 2, Airbnb has an amazing insurance policy. We just had someone break a teak chair in one of ours with one of their kids, jumped on it. Took a picture of it, sent what the cost of new is, sent it to Airbnb. In 2 weeks we got a check, and we bought ourselves another teak chair. Excuse me, you have to cut that out. I need a sip of water. Where am I at in time?
I can't even see it. I think you're good though. 7 minutes.
So I just probably took 30 seconds, so like another minute or 2.
Yeah.
As I said, Airbnb covers anything that's broken. You just have to be on top of it and accurate. Airbnb also allows you the opportunity to make between 2 and 4 times of what you would normally get in rent per month. And there's no having to evict people. There's no always a problem. You know, when I rent to static, it would be, I had a problem with my kids, or I had this problem, I can't pay you. Right now I'm waiting on rent for July from a couple people, and it's already basically mid-July. So again, I'm a massive fan of Airbnb. I think the risks and the rewards, I think the rewards way outweigh the risks. I'm completely open to it. Now I've gone to resort areas where there's nothing they can do about Airbnb because it's the beach, it's ski in, ski out places, places in Florida where it's just so common, like whether it's on Siesta Key. So I've kind of insulated myself. Now I've gotten to the point to where our Airbnbs are between $2 and $5 million properties, but I started out at 50,000, and it's taken me 20 years. So anything that moves super fast will probably die super fast. Anything that takes a long time and effort more than likely will survive at the end of the day. So be careful about if you have a city property or something where the borough can change it over and you're buying it because you see how good it could do in Airbnb. You want to make sure that the static renting itself to one person will cover it and make you money that way. And as I said before, you know, if you become where you like to flip houses and you like to do work, instead of keeping the property, you can ultimately too fix it up and sell it and make $10, $15, $20, $30,000 if you have a very smart realtor, if you have good contractors at the end of the day. That's another big problem in today's market. All the prices are going up, but it can be found. Usually when something gets really hard, most people flee from it, and the people that stick with it end up doing really well. I'm kind of a contrarian. So if something gets really hard, I want to double down and go deeper into the fire, because that's where the real wins are. When the masses exit, you know that there's opportunity there. And when everyone's fearful is when you should get aggressive and find opportunities at the end of the day. And when everybody's aggressive, you should probably know that a crash is coming, because that's what the markets do at the end of the day. So Fidelis is interested in helping the individual or the family get their first house. We're helping to guide you through that process. If you have the dreams of becoming a millionaire through real estate, we can do it. We can help you with that too, through ideas, through financing, through giving you ideas for 5 years down the future of what you have to do now to set yourself up there. So stay tuned for other videos, other topics as well. It'll be from being an entrepreneur, watching Fidelis and the team scale across the United States. So if you're self-employed, it'll be a great live action to see where I make mistakes, where I hit wins, where we recruit people, how we are changing our company to be one of the best places to work for. As we speak now, big companies, you can just Google them, I won't name them, have let go 4,000 people yesterday, thousands the other day. You're seeing a massive exodus. And when that happens, again, I'm contrarian. I say, let's go. Let's start going nationwide. Let's start hiring some of these people, getting their jobs back, and let's give the consumer one of the best rates, one of the best experiences that they have. And if you have the dream of doing more in real estate, we're here. And feel free to shoot us an email. Feel free to get a quote from us. At the very least, if you have no interest in that, we'll end up saving you money on your deal. What's happening is these large companies, these mid-sized companies, they're so bloated that they're taking their rates up or they're firing everybody. So you're going to have one of two issues. You're going to have higher rates to pay over 30 years, or you're not going to have enough service to make you happy on getting your deal done. And don't make that mistake. Look for a small to mid-sized company, and we'll still have sharp rates, we'll still have the service, and you'll end up enjoying the process. Take a look at our Google reviews. It speaks for itself. No one is even close to that number. So I appreciate it. Stay tuned for other things. There'll be all kinds of topics, from being an entrepreneur to improving yourself, to exercise, to sales. A lot of different topics. Thanks for listening to this. Hope you have a great day, and we'll see you soon.
That was about 11 minutes.
And you'll